The ASX briefly rallied beyond the symbolic 6,300 mark on Monda, as traders rotated out of defensive stocks into the ASX's heavyweights. Having broken, albeit briefly, new ground above 6,300, interest will be now how a very broad upward trendline resistance level holds. If it doesn't, perhaps the indication is of more record gains to come, given that resistance levels ahead seem to be rapidly diminishing. 4. Material stocks took their turn to lead the charge yesterday, rallying 1.1% throughout the session, largely thanks to some considerable activity in BHP and Rio Tinto. This was especially true for BHP, which closed trade 2% higher, courtesy of a news release that revealed BP will launch a $10 billion for the company's U.S. shale assets. Not to be entirely outdone, the banks continued their run higher, as the financial sector added 0.25%. The CBA was again the major driver in the space, although it was amply supported by plays into Westpac and the ANZ. Unlike Friday's trade, however, there were some noteworthy laggards. The industrials were weighed down, weakness in those stocks globally, while the energy sector gave up ground following a dip in oil prices. 5. Brexit dominated the newswires, following news out of the UK that the May government's Brexit Secretary David Davis has resigned over dissatisfaction about the British government's direction in Brexit negotiations. This story developed further this morning, with the original face of Brexit, Boris Johnson, stating his desire to resign as Foreign Secretary. The news came only 48 hours after Prime Minister May announced her government has agreed on an appropriate plan to exit the European Union. The story led the GBP/USD to reverse its short-term shift higher, as fresh doubt enters the minds of analysts about the solidarity of the May government, and hence the strength of the GBP. If further divisions emerge over the coming days and weeks, watch for further selling of the GBP, with the CHF and Euro possibly standing to benefit from any risk-off play. 6. The AUD/USD has broken trend, breaking through the top of a channel good since the middle of June, to trading above 0.7460 at time of writing. The move for the pair is USD weakness inspired, and began after what has been judged, on balance, a softer non-farm payrolls report. While the longevity of this swing is difficult to predict, the likelihood of ongoing strength in the AUD/USD is rather doubtful. However, in the short term, and provided a risk-free run, an imperfect and loose indicator of the extent of this rally could lie in US dollar index. The last time the index was this low, the AUD/USD managed to trade around 0.756-0.7. Asian markets kicked off the week on a positive note, seemingly resuming the relief rally that characterized trading at the end last week. The Shanghai Composite rallied 2.5%, the Hang Seng clocked gains of 1.3%, and the Nikkei has pushed over 1% itself. The news flow was low in Asia, with the biggest story revolving around a speech delivered by BOJ Governor Haruhiko Kuroda, during which he reaffirms he and his team's commitment of keeping accommodative monetary policy settings until the bank's 2% inflation target is reached. The JPY/USD has thus far proven unresponsive to the news, seemingly wedged by sell forces in both individual currencies. 8. Market Watch SPI futures up 27 points or 0.4% to 6,267 at 7:15 a.m. AEST. AUD 0.5% to 74.66 US cents. Overnight high 74.84 on Wall Street. Dow 1.3%.